Hey YouTube, how are you guys doing today? I hope you're doing well. So today I'm going to talk about AT&T and why I've given it a buy recommendation and why I have a bull thesis on it. So before I start, I'm going to introduce a little bit about myself so you get to know this channel a little bit better. So my name's Charlie. This channel is Lifetime Success Journey, and it's basically the journey towards the stock market, towards reaching financial independence and financial freedom. This channel is for anyone who wants to know more about the stock market, investing, and anything that related to financial finance and financial freedom. I will not. My niche is the stocks and stock market, but I will also be able to talk about retirement accounts, budgeting, taxes, and a whole range of ways to strategize in order to become financially independent. So, continuing on, this will also help those with maybe younger generations that don't have as much capital to invest yet, but still want to get into the stock market. I'm gonna help. This is mainly for them, so they can get a better idea of how to allocate their money, what percentage, especially if they're being charged commissions, then you guys should definitely take into consideration how much you put into a single stock if you're going to be charged a commission, because that will definitely eat away from your returns if your account is small. And that's, what's it called? I'll help you move through that. I will also teach you about regular diversification, strategy, portfolio construction, balance sheet analysis, income statements, cash flows, as well as EPS and just anything general to do with related investing. So, for example, not even just a quantitative analysis, but also a qualitative analysis. And further on, incorporate these fundamentals with potentially some technical analysis in order to see where that margin of safety and what an accurate intrinsic value and full value would be for any given stock. So that'll come on later down the line in the future. But for now, I'm going to go over AT&T. So basically, the price right as of today's date, closing date, is $32.83, giving it a very attractive price valuation. It's historically, the way I viewed it over the past couple of years, I've priced this stock anywhere from $37 to $43. $43 being extremely high, so really $37 to $42 to be very safe. Realistically, even on a conservative side, you can say that it's 38, which is still over 15% margin of safety from its current price. So given that, margin of safety is there. PE ratio, 6.31, extremely low for any company, and especially during these times where we see companies getting larger and larger and markets hitting new peaks, it seems just about every week. It's incredible. It's such a attractive price valuation. Its EPS is a little over $5, meaning that the dividend ratio is extremely safe and extremely attractive too, because you're getting over 6% return on dividends, and its dividend ratio is only 0.39, meaning that this dividend is more than safe. Now, I will give you the heads up that its guidance for 2018 is $3.50. But even at $3.50, your 50-cent ratio, 50-cent quarterly dividend comes out to $2 per year, which is $3.50. Even if we miss badly and hit 3, it's 2/3, so 66%. Still more than safe dividends, with extra to go into working capital and any other investments we see fit for the company. Continuing on. Oh, and if you're wondering why I'm looking to the right a lot, it's because I do have my sheets, plenty of sheets. Like I said, I worked very hard to finally conduct my final analysis for AT&T, as I've been following it over the last couple of years, and I've finally done a more in-depth search and getting to know the company very well. So that's why if you see me catching me looking to the right, I'm looking at the information. So continuing on. Its book value is about $19.30, giving it a PB ratio of 1.68, which is actually quite attractive if you compare to other companies that are highly valued. Price to sales ratio 1.46, and its gross profit, so price to gross profit, 2.83, which means it actually generates lots and lots of revenue. So yield was already gone over 6%. I just want to reemphasize that. That's 6% returns if you just don't even trade it, buy and sell. That's just income coming in guaranteed. So return on equity, 21%. Return on assets, 7%. Those are that's pretty high. I do enjoy seeing that. Means we're using our assets the right way. So what's it called? Our debt is 0.68 or 68%, meaning it's not too bad. It's not amazing, but it is relatively safe. I'd say a debt ratio of 0.75 or less. 0.7 is good, as in the green. 0.75 starting to get in the yellow. 0.8 and above, you should really start to question and really be compensated well for the risk that you're taking. At 0.68, it is approaching that yellowish medium risk line. And separate from that, though, that's just the ratios given wise. Talking about AT&T, a lot of people's biggest concerns is its debt, and I understand it completely because with the new Time Warner acquisition, and as of recent past, the DirecTV acquisition, and actually as of recently, AppNexus and one more company, Alien Bolt, they're taking out loans or maybe supplying the cash themselves, but I know there's already a huge debt concern with AT&T. So one thing I want to put into your minds, or to give maybe open up to this perspective, is that, well, although interest rates have already risen and will probably potentially rise down the line in the future, basically AT&T has already locked in its rates for its current loans. So we have a couple years until we worry about the debt. And in those couple years, AT&T has specified in its last quarterly earnings that one of its priorities is to deleverage the company, so basically pay off the debt and manage that debt, which will definitely help out by the time our loans expire and we either have to when we have to renew. Which means, although we still will probably have higher interest rates, the amount that we need to be financed will be significantly less, therefore balancing it out and increasing profitability in the end. Therefore being able to continue paying out those dividends that we find so attractive at such an attractive 6% gain for such a great blue chip company. So continuing on, with the acquisition, its current ratio is 0.97, quick ratio also 0.97, and its cash ratio 0.62. I normally like to see these ratios above 1.0, but given the past history of AT&T, it has actually gotten better over time. A big part of this is due to the acquisition and taking over the entire assets of Time Warner. But even before that, you would see it slightly improving with AT&T on its core processes from before that, before the merger, that is. And compared against the sector in general, the industry itself, the telecom and media industry, tend to have around those ratios, so it's not awful. It's not the best, but it's pretty good and stable, and I'm happy with that strong balance sheet. So continuing on, because it's recent acquisitions and its significant increase in size and size in general, AT&T is now divided into 4 different segments. That is the advertising and analytics, media / Time Warner, or Warner Media as it's now known, no longer Time Warner, Latin American operations, and as well as AT&T Communications. So I'm going to give you a brief description of each just so you get a good idea. I don't want to take too long in this video because, like I said, these theses and these videos are just to take note for anyone who wants to follow along. And potentially join, maybe use the same investments that I make, as I always give these short, but I always these short infos videos. But I always recommend that you do your own research. You look into the company itself and make sure that you feel comfortable taking a position in this company. I will be as transparent as possible. I will answer any questions and concerns or comments down in the comment section below. But again, always do your own research and make sure you're confident. Look at the numbers and think for yourself. So that will explain the short video. but you'll be able to also track my progress over time, just in case. So, continuing on, like we said before, it's one of its primary focuses is deleverage or lower its debt. It wants to increase its EBITDA ratio, so net debt to EBITDA is expected to be 2.9 times by the end of 2018 and 2.5 times by the end of 2019. Its historic levels is about 1.8 times, which it hopes to reach by 2022. This company, what's it called? So let's go to the first segment, Warner Media. Before that, though, this quarter alone, or last quarter, it has invested $25 billion into capital expenditures, and again, its EPS outlook for 2018 is $3.50, assuring that dividend is safe. Continuing on, what's it called? So Warner Media. What did AT&T get with Warner Media and the acquisition? So basically, what it received was lots of media rights, especially the big networks being CNN, NBA, March Madness, NFL, Sunday Ticket, MLB, PGA, and HBO, plus Turner, Bleacher Report, and Otter Media, plus Warner Bros., which is all great movie companies, as you know, and HBO has Game of Thrones, which is another great, amazing asset. But continuing on, another key factor that I want you guys to really consider is live sports. Live sports is still very huge because nowadays with TV, being on regular TV, you can fast forward with DVR or rewind, or even if commercials are on, what do? We tend to go on our phones, right? But the one thing we can't fast forward or ignore, live sports. So although advertising prices or revenue has gone down from regular TV, traditional TV, for sports, it's still quite high because you can't really fast forward because it's live. On top of that, CNN is one of the most visited sites in the world for their online site with all its other sectors, if you include that for digital. And also another key part, the use of all the data that's obtained, so the views, box office views, demographics, all the information and analytics that Warner Media has obtained over the years is directly being comprised and sent over to its advertising analytics sector to complement their works. Also, it has Time Warner has had over 166 Emmy nominations. A lot of those probably go towards Game of Thrones and others. 16% growth in Q2 for their advertising on the show itself, and it still expects another 3 to 5x yield improvement using the new ad models that are coming in, so complementing each other, again, AppNexus and its advertising sector over to Warner Media. Moving on, AT&T Communications, it'll increase its service revenue with over 50% margins. So basically, one company that has really increased its service revenue to offset lower sales, Apple. Apple's service revenue has skyrocketed in recent quarters, and that's just amazing. It's mainly profit. Over 50% of it is just pure profit. And so AT&T has taken note of that, obviously, and even just in general noticed that service revenue does have high potential, and definitely capitalizing on the abilities to go into that. So continuing on, DirecTV Now app for the phones, which is also able to collect data. So everything you do on your phone, what you seek during the internet browsers, obviously you know cookies is running in the background, whether you like it or not. We know the Facebook scandal of all our information and everything. But even still, we're being tracked everywhere we go. Let's just be blatantly honest. All right, it's 2018. I mean, privacy, if you're going on the internet, don't expect too much privacy. That's just facts. I mean, like it or not, it just is what it is. Take it for what you want. But with all of our data, they see everything we're streaming, videos, collecting. How do you think they get the recommendations for what we want to see next? Or, hey, people who like this also like this, right? All that data, correlations, and so on. So all that information, all that data is being able to be compiled into specific data to produce tailored advertisements for each individual. And with those tailored advertisements, they've proven to be extremely effective, especially with the new ad models as they've been talking about. And so they can use that with their advertising sector to license off or sell off advertisements to other companies, and that data, which will increase revenue a lot, which is why we've seen so much growth in its advertising department alone, and we'll continue to see that in the future, which will bring huge potential for AT&T. Also, before that, if we think about it, AT&T didn't really have much space to grow. It really just basically expanded as much as it could in the telecom sector. There was nothing much to do other than 5G, which 5G will definitely help out a lot and revamp everything again. But being able to expand into the media and entertainment industry has been a huge plus, which will definitely allow AT&T to grow more in the future. Because while everyone's staying still and kind of looking for smaller investments, AT&T made a huge play and recognized the trend early. And just to show you how early they recognized it, I mean, they acquired DirecTV a couple years back, I believe 2015. I will double check that. But then the Time Warner acquisition was announced in 2016. It was in 2018 in June when it was finally approved. This was planned way back in 2016. Okay, so that means that they've been going at it for a while, really seeing this future. And so when they did that, they looked at all the different broadcasting companies and everything, and they were just determined that Time Warner was the best to make them a big contender, especially with the likes of Google, Netflix, Disney, and everyone else who's now entering the media sector. Because what they've taken note of from all their phones and phone data is that the highest use of a phone or tablet is video streaming. So they can capitalize on that video streaming with DirecTV Go, DirecTV, put them into bundle packages with new phone plans, having HBO Go now as well. DirecTV Now, not DirecTV Go. I've been mistaking that with HBO, so it struck me on all the past times that I've said that. But DirecTV Now and HBO Go and every other channel that they have as well with the new acquisition. There's a lot of potential for the media industry to grow with AT&T, so there's growth potential there. So not only is it a nice secure dividend-paying stock or income stock, if you want to consider it at this point, but it also has lots of potential for price appreciation, which definitely recommends this as a long-term play. We'll go discuss strategy, like trading strategy, later down in other videos, because there is, depending on what your strategy is over the long term. If you're younger age towards early, you want to see a lot of capital price appreciation, but also you want to start planning out for retirement, and these are for the older people that want to, or perhaps those closing to retirement age that are watching this video. You want to maybe sell off a couple, depending on where you are, and then keep some of it for just pure income for the rest of your life, or maybe you may want to keep all of it, or you may want to sell all of it. It depends on what your capital, part is, and what your strategy is. And we will discuss that later on in the future. Continuing on, again, 5G is coming, so that'll be a very big benefit. The advertising has grown more than any other, more than any other segment that they've had, and they're very bullish on that, and I also agree. And Latin America has also been increasing. Whatever they're implementing with their in the Americas or in America, with the advertisements, the analytics, the data, putting it together, bundling and selling advertisements, as well as the huge investments they're going to put into HBO and new movies, to those great creative minds that create so many huge blockbusters. They're going to incorporate those same things and basically scale it down, but use that in Latin America to hopefully scale that up and build a bigger global presence. Starting with Latin America, obviously. On top of that, there's also new plans to work with like firefighters, EMS teams, and other emergency teams. New systems that phones and allow better connectivity and great connection. AT&T also has the largest fiber network in the United States. So if there's anyone in the front lines of 5G, it would be AT&T. So that's basically it for the basic, smaller, quick analysis, quick summary for AT&T. I do feel that it's, maybe in the short term it may stabilize around 30s, 32s, But over the long term, over the next couple months, I definitely and definitely years. But even in the short term, a couple months out, I definitely do see the price being rising once again. And with this 6% yield, I mean, it'd definitely be a great time to sit on the sidelines, at least with an initial position, to just start gaining a good yield and a great entry point to AT&T. So for those reasons, I hope you take into consideration AT&T. And if you agree or disagree, feel free to comment in the section down in the section below, as well as give this video a thumbs up if you liked it or approve. And definitely, I'm open to any suggestions, recommendations, questions, comments. Definitely feedback would be much appreciated. And yeah, that'd be about it. Thanks for listening, guys. Good luck with your investing, and look forward to hearing from y'all. Peace.